David Miller, one stock you like at the Catalyst Insider Buying Fund is O'Reilly Automotive. These shares are up over 24% so far this year, but aren't they getting a little bit pricey? It trades at over 20 times next year's earnings.
So it's been a great stock, but it's also been a wonderful business. The business has been growing revenue at a pretty healthy clip. They've been growing their EPS about 20% annualized, so they're worth it. And frankly, I'd much rather own a company that's a little pricier if you can see that consistency in terms of their growth and the lack of the economic sensitivity. A company like O'Reilly wasn't down significantly at all in a year like 2008, so when there's some economic worries like there are right now, the nice thing about some economic pullback is people actually shop more for auto parts in a bad economy, not less, because they buy less new cars and they need to fix their old cars more. So I really like O'Reilly here.
And you're also a fan of Mondelez International. Stock's up, I think, around 16% so far in 2015. But is there more to the stock than Bill Ackman's activism? He's nosing around in the stock.
Yeah, so similarly, there's a lot of insider buying there. And it's not just Ackman buying. There's also buying at Trian. And some of the same theme. A very well-run food company, runs multiple brands, not economically sensitive, great, simple business, and some of the best hedge fund managers are really buying in a big way right now, as are the insiders. So that creates some confidence for us in that company.
All right, let's stay in the packaged food business. You like Pinnacle Foods. This stock has surged about 25% year to date. I guess everyone wants a brand, right?
Everybody likes being in the areas of the economy where they don't have that economic sensitivity in a time like now where people are very concerned about China and what's going on in the emerging market frontier. A company like Pinnacle has no economic sensitivity. They're a great growth business. They've acquired some other food companies. And when you can run a great scalable business in a country like this, where you can distribute your products and really grow and create market share for yourself, can be a great place to keep your money.
And then finally, TransDigm. This stock's up around 15% so far in 2015. They're in the aerospace component business. This has been a strong business. We saw Warren Buffett take over the rest of his, finish out his shares of precision cast parts. So people like the space. That said, is it getting pricey here?
I think there's a questionable theme here. So stocks on an absolute basis versus their relative norms, they do look kind of pricey. But when you compare them to interest rates as low as they are, they actually look kind of cheap on a relative basis. So when we have a choice like that, we can go into a nice solid growth company that's in the aerospace business, that's not economically sensitive, where they've run their brands very well and they've scaled their business well. That's a place where we like to own the stocks, especially when we see multiple insiders taking more money out of their own pocket to buy more stock like they are in TransDigm.
All right, well, thanks a lot, Dave Miller.
Thanks a lot.
And thank you for watching The Street.